Hello, greetings to one and all. This is Jack Lookman welcoming you to our series, Jack's Curated Business Ideas. Today's topic is collaborative YouTubing. Now, what's the idea? It's basically about profit sharing from the proceeds of a successful YouTube channel. The profit shall be shared by team members and stakeholders, as well as interviewees as necessary, and then the profit share formula app shall also be used. What are the requirements? Well, basically, you need a YouTube channel, human resources, internet connection, digital device or devices, the profit sharing formula app, content creation, and a positive mindset. How does it work? Now you need to create a YouTube channel in the niche or niches of interest. You need to have interviewees as necessary. You need to have a team for the purpose of execution. You need to solicit likes, shares, subscribes, and maybe reposts as necessary. You need to work towards monetizing the YouTube channel. You might also have stakeholders, for example, investors as necessary. When the channel becomes monetized, you shall share the profit pro rata by leveraging the profit sharing formula app. There shall be terms and conditions to be followed. The share formula shall be directly related to the cumulative number of views, the views per video, the monthly income generated, etc. This shall continue for as long as the YouTube channel is monetized. There shall be minimum YouTube channel income thresholds for ease of administration. Now, what are the benefits? All concerned parties shall benefit financially for as long as the income is generated. The team and stakeholders shall be incentivized to promote the videos. Ditto for the interviewee. The burden of promoting or marketing the YouTube channel could be lifted off the content creator. Therefore, the content creator could focus on content creation. It gives all stakeholders, including the team and the interviewees, a sense of ownership. The process is a fair way of remunerating all stakeholders. The profit sharing, especially for very successful YouTube channels, could be for a lifetime. Residual or passive income may be generated for stakeholders. Now, what are the threats and weaknesses? Well, there could be fraud, there could be dishonesty, there could be conflict, there could be greed. The YouTube channel could be terminated. There could be administrative errors. There could be miscommunication. And there could be breach of trust. Now let's talk about some legalities. This may involve exit strategy. For example, if a stakeholder wishes to exit the process, or if you are coming to the end of life of the YouTube channel, There could be agreements or contracts in place. The terms and conditions need to be spelled out. You need to effectively manage expectations, and then you need to include disclaimers to indemnify yourselves. Now let's touch on a case study. A YouTube channel on interviewing successful husbands was created. The team composed of the content creator, who is also the interviewer, and the video editor, the investor, and the interviewee. Let's call him Mr. Lagbaja. After 6 months, the YouTube channel is monetized. There is usually one interview per week with different husbands. Now let's focus on Mr. Lagbaja. The agreement is that the profit is shared in ratio 1:1:1:1. That means each of the stakeholders gets 25%. Now, this will be prorated based on the monthly income from YouTube. So, for example, in month 6, or when YouTube starts paying, assuming the gross number of views for the channel at month 6 was 600,000, assuming the views for Mr. Lagbaja's video was 120,000, and assume that the income from YouTube in month 6 was £1,000. Now for month 6, if you are going to calculate the money due to Mr. Lagbaja, it will be 1/4 times 120,000 views divided by 600,000 views and then multiplied by £1,000. Therefore, out of the £1,000 for month 6, Mr. Lagbaja gets £50, or each of the stakeholders gets £50 in month 6. Okay, so that's what Mr. Lagbaja gets in month 6. Now for month 7, assuming the total number of views for Mr. Lagbaja's video is 125,000. Now the gross views for the YouTube channel, assuming it is 700,000. Now the YouTube payment, assume is £800. Therefore, if you use the same calculation, Mr. Lagbaja gets, if you're going to calculate it, it's going to be 125,000 views for Mr. Lagbaja divided by 700,000 views, which is a gross number of views, times £800 divided by 4. And that comes to roughly £35 for Mr. Lagbaja. Please be mindful that Mr. Lagbaja is only getting a quarter of the prorated views for his videos. By the time and his own views might only account for, in this case, it's 125,000. Don't forget that there are other people you've interviewed, and also their own views might accumulate as well. Now let's look at month 8. Assuming the total number of views for Mr. Lagbaja is 130,000 cumulatively. Now the gross views for the YouTube channel, assuming it's 950,000. Now assuming the YouTube payment for month 8 is £900. Using the same calculation, Mr. Lagbaja gets approximately £30 in month 8, and so on and so forth. Now a small disclaimer. This presentation is just an idea. Nothing is guaranteed. It is up to you to carry out due diligence. Monetization requires many hurdles. We don't take any responsibility for loss of income or any related disappointments. It's up to you to perfect the idea and use it for your benefit. Now, here are some thoughts on administration. You need to put in place legalities. You might want to collect contact details of all stakeholders, such as their name, their email address, their mobile number, etc., as well as bank account details. Because if you're going to make payments, you can make payment to them. You might also decide to get a next of kin in case the stakeholder becomes unwell or in case he passes on and you want to continue the legacy. You might take the next of kin of the stakeholder's details. You might also consider administrative charge to be deducted in administering the process. And this might be a percentage of whatever money you make. And then you might also consider deducting tax, either from source or maybe that would be the responsibility of the stakeholder. Now, here are some points to note. If the video editor chooses to be part of the profit share, then he doesn't get paid directly for his services. His payments or remunerations shall be the profit share, which you will get maybe monthly, depending on how you calculate it. There may or may not be need for an investor. For all intents and purposes, the content creator might have all the financial resources required. So, for example, for the gadgets he's going to use, for the content creation, etc. And finally, in view of the above, the profit sharing calculations may be amended accordingly. So, for example, if there's not going to be an investor, that means you might share the profit between three parties. And for example, if you're going to pay the video editor, for example, upfront, then it may not be included in the profit share. So I hope you've got an idea of how this collaborative YouTubing idea works. You're going to leverage profit sharing and you're going to leverage the profit sharing formula app. And that way, whenever you make profit, you share this pro rata with all the concerned parties. And even though we've used Mr. Lagbaja as a case study, you might replicate the same thing for other interviewees in the process. So, for example, if there was Mr. Lagbaja, if there was Mrs. Lasongbe, if there was Mr. Femi, if each of them were involved in the interviews, you might also want to replicate the same process for them. And then if it happens that maybe you don't actually interview people and what you do is just basically you creating your content, then it might be up to you and maybe the video editor to share the profit accordingly. Or if there's an investor, you share it accordingly. And if you decide you want to do all the work yourself, then you get all the money yourself. So I hope you get the idea. So basically, if you are involving team members or stakeholders, this is a formula for sharing profit. And one of the other benefits is that you might not actually need much capital to start your YouTube channel. And therefore, those who invest in the process, the stakeholders can share out of the proceeds of the business, and everybody is happy. So I hope you got some content, some value. If so, please consider liking, sharing, subscribing, and reposting. This is Jack Lookman signing off. Ire Kabiti.